On behalf of the San Mateo Area Chamber of Commerce, I'd like to welcome you to our Business Essentials. And we're very lucky this morning that we have Will Schaub with us. He's the VP of Sales and Business Development for WillServ Business Solutions. He's got quite a resume, which you can check out online. And he's going to talk about some very important issues right now. What's the bridge between now and the CARES Act relief? So with that, Will, take it away.
Well, thank you, Cheryl, and good morning, everybody. Thank you for coming to the webinar. I want to appreciate the San Mateo Chamber for allowing me the opportunity to share what I think is valuable information and could be critical for a business during these uncertain and trying times. So what is the bridge between now and potential relief or payouts from the CARES Act? Now, some have filed and are waiting. Maybe they're not quite sure. And also, if you've already received it, is it enough? Well, what I'm going to talk about today is what might be available for businesses and commercial real estate owners is instant and ongoing relief for businesses today. And it is independent of the CARES Act. You see, this is monies that are actually paid regardless of any provisions in the CARES Act. And these programs have been in place for many years. And unfortunately, 90% of businesses and commercial real estate owners, they don't take advantage of them. They've been in place pre-crisis. So what I'm going to talk about is perfectly built to handle some of this. Our company has software that's built pre-crisis to search out over 100 local, state, and federal credits and incentives that will reveal that to you, the owner. And then we work in cohesion with your tax professionals. So your CPAs, your tax advisors are actually folks that we would reveal information to on behalf of the business. They'll bless it, or they won't. If they don't, it doesn't cost the business anything. But if they bless it, then we help them file those provisions so that the business owner or commercial real estate owner gets those monies as quickly as possible. And if you do it with our firm, there's no savings, there's no cost. And then if you also do it with our firm and you decide not to execute with us, even if we reveal lots of money for you, then it's no cost. We handle all the time and the energy and the risk to get those results in front of you. And then you decide if you want us to execute. And when we do, anything that has to do with tax incentives or credits, we perform an audit defense guarantee. Kind of looks like this for every client. And the company that I represent out of Michigan has been doing this 19 years, and no one's ever had an audit because we run everything against audit defense guidelines before we actually execute. So they kind of reverse engineer the process to make sure that it's 100% kosher and compliant. And then my contact info and link for this intake form will be provided to you at the end, but also email to anyone that's registered. So if you don't mind, I'm going to go ahead and talk about some of the things that are available to business owners and commercial property owners. Simple intake forms, not a lot of private information. And really, this is just based on some estimates. But the first question right here is, have you purchased a commercial property, building, or completed construction or tenant improvement renovations on your property or building in the last 20 years of at least $500,000? It's not a big number in California, especially in the Bay Area. And so there is a potential to receive an average of $75,000 per million in investment, as going as far back as 20 years, and that becomes an offset on your tax liability. And what I'm going to do is actually show you what that looks like. Hopefully you all can see my screen okay. Great. So this is an actual live client. This person bought a building in September 2012 at $993,000. We took a depreciation schedule on their books, so we don't even go into their taxes. So there's no real private information. We're not talking to the CPA yet. We're just taking information, and then we're going to do what they call a feasibility study It's an assessment using automated software, and it's very exact. The depreciation before is 7239. We do the cost seg study. It's going to be $29,991 in difference, and that changes here. And then depending on their tax bracket, we'll call this, I think it's like 32%. This is a dollar for dollar tax offset against our liability right now. And so if you depreciate normally on a building of 39 years, it's like Groundhog's Day. Every year it's 24,821. I won't be here in 39 years probably. So, but you have the right to, according to some tax codes that allow you to take an accelerated depreciation in 5, 7, and 15-year buckets. So what we'll do is we'll engineer that. This is an engineered study. But the neat part about this client right here is they bought it in 2012. And so now we can take 8191 plus this, all the way down to 2020. It's a total of $41,000 and bring it to them right now. If they were filed their taxes, and let's say they had a tax liability of 41,000, we would eliminate that right now. They would be net zero. Well, why is that important, even though it's not a refund? Is because if you know that you owe 41 on July 15th, and now you don't have to pay it, you can actually take that money now and know that it's freed up and go reallocate it towards other things that are important in your business. And there's no amendment on your taxes to do this. So that is a really important piece. And it doesn't matter if, by the way, we can do this in all 50 states. And then at this point, we would bring this to the client and help them or the business, and they would understand if they want to do this. We would do this in conjunction with their CPA or tax attorney. Headquarters talks it out with them, make sure they understand exactly how we did this. And then if they want us to execute, then there would be a percentage of the fees. But we wouldn't charge them a thing if they didn't execute or there were no savings in this place. So really no cost and there's no obligation to move forward. Also, we're going to record any questions. We'll have a Q&A at the end, but if we don't get to your questions, put it in the chat box. They're going to record the chat, and then we'll get back to you with specific answers if we don't get to them. So now I'm going to go back to question 2. So a lot of folks on the line are probably thinking, well, a lot of folks are in business like restaurants, right? Hotels, bowling alleys, maybe even funeral homes where they don't own the building, but they lease that building. It works exactly the same way. So if you've done any tenant improvement or renovations in the last 10 years of at least $400K, and as long as you paid for the renovations, then we can run the exact same process. So I would just go back to that form once I find it. And it would look exactly the same. So if they did $930-something thousand of tenant improvement, we would run the assessment exactly the same way, even though you don't own the building. Now, if you put $930,000 of investment in a building you don't own, you should get something out of it, hopefully. So we can help you do that. And so restaurants are extremely big for us. I've got one restaurant client that owns 5 restaurants, put $1 million in each building before they even open the doors. So if a lot of them are actually furloughing their employees, or obviously now they're on curbside or delivery only, then they've lowered their profitability. We can put some of this money back in your pocket. And it's your money. Let's go back to the survey. So those are 2 really big, important pieces. I also had a nice pizza and pub joint in Los Altos. Same thing, put $1 million in. We were able to find them money that they could use immediately. And, oh, here's one thing too. If I go back to that, let's say they only owed $20,000 in their liability and they had 41,000. We would wipe out that 20 grand, and the other 21,000 would roll over into the next year, and it can roll over into the next 20 years. So it just becomes a credit that they can use as a buffer against their tax liability in the upcoming years. Actually, you know what? I'll pause. Are there any questions just on those 2 pieces?
Well, you mentioned that you would be able to do this before you even talk to your CPA. At which point do you bring them into the conversation to see if you want to go back and refile taxes?
Yeah, we're going to go run the feasibility study. As a matter of fact, that pizza joint, he brought my 1-pager back to his CPA. The CPA said, don't do it because traditionally you're going to be charged up front. You're not going to know what the ROI is. You're going to be charged fees, hourly rate, right? Administrative, all that. So he said, don't do it. And I asked that owner, I said, look, if you can give me the depreciation schedule and know that there's no cost or obligation, can I run the assessment? And then you bring the assessment back to your CPA. And then we get him engaged with he or she engaged with our headquarters to talk out and address all concerns. And then at that point, the client would say, it's been blessed by the CPA. The CPA has to bless it. They're the one that is going to handle all the filings and make sure that it's 100% kosher. We walk them through that. And then that's when we agree and we would do that. There's no amendment on the taxes though. It is a change of accounting method. So it doesn't go back and raise any red flags or any audit situations. And then of course we perform an audit defense guarantee on top of that. Are there any other questions in regards to that? Okay, great. Then I'm going to show you something that actually is instant. That's kind of instant. This is really instant. This is going to be question number 3. Oh no, actually, well, there's something that goes with it. It's not quite as instant, but do you pay property taxes at $30,000 or more annually when you own your building? If you do, we can go to any county assessor's office in the country and make sure that there's no errors, overcharge, everything is exactly the way it's lined up to be. We'll do that at absolutely no cost up front. And then if we find savings and the client decides to execute, we'll charge them a percentage of the savings. And then they'll agree to that and we'll move forward. If they don't agree to it, there's no cost to them. We'll do all that work up front. But this is the one that I'm extremely excited about, and a lot of folks don't know about this. But if you conduct a business that's in manufacturing, agriculture, life sciences, technology, wineries, distilleries, breweries, startup, and you've got a minimum payroll of $250,000, this tax incentive right here is a physical check from the IRS in a refund, and it's pretty immediate. It is this year, right now, once we execute on this. It's a payroll tax credit, otherwise known as R&D. But R&D, everyone thinks that R&D is, you have a person in a lab coat that, is using beakers 100% of the time, and that's your R&D department. But we actually engineer this. So let's say that it was 50 employees, $1 million in payroll. We'll take each employee, figure out how much they make, what percentage of their week is actually spent in R&D, even if they're in the sales department, engineer that, use actual compliant tax codes, and then apply that, and then put that in front of a business owner. And the average savings is $50K per million in payroll. So if we had $1 million in payroll, let's say we bring $50K, what's neat about this is we can go to 2019, which is the current tax year, and then 18, 17, and 16. So if we've never run a study, we can run it, take 50K times 4, it's a $200,000 instant refund from the IRS in a physical check. And then that becomes an ongoing benefit for 2020 because we'll run that study 2020, 2021, and beyond. And we only charge them a percentage of the fees if we find, the savings. So, and that's on existing payroll, and we can do that for any company in America. So what's nice about that is if it's a manufacturer or distillery or one of these folks, let's say they own a building, or maybe they don't own it, but they've done tenant improvement, and they also do this. We'll take each one a la carte and start putting together the assessments and then putting those available dollars in front of them. And of course, again, we work with their tax professional to make sure that once we reveal it, we engineer it. CPAs usually aren't engineers, so they're very aware of this stuff. They might even be able to conduct it, but they'll need a firm to engineer it. And we engineer it, and then we reverse it, and then we put it on a defense guarantee on top of it. And then here's something that a lot of folks might be doing. I know it sounds kind of anti-COVID right now, but a lot of folks are actually hiring new folks, new people. And this is a credit, it's called WOTC, the Work Opportunity Tax Credit. There's 100 plus credits. You can get between $2,400 and $9,600 tax credit for hiring an employee. But you need to know before you hire them, because you only have about a 30-day window to get that done. So you need to actually understand what this looks like. But because of privacy, You can't ask them if they're a felon, a veteran, if they work in an enterprise zone, in an interview or on an application, but you can do it on a federal survey as long as it's private. So we have a portal that will help an employer identify how much the credit would be on a person, but not how they get it. And there's 100 plus. This actually was indoctrinated after World War II to get veterans back into the workforce. So $2,400, $9,600 tax credits is extremely lucrative to hire a group of folks. And so we'll help you identify that. But also the CARES Act has an employee retention credit, or ERC, and we'll help you identify those too, so that you know that if you're retaining employees, you can identify who and which of those folks would qualify for the ERC credit. And we can talk about that on a discovery call. It usually takes about 30 minutes. Now, those are at no upfront cost and no obligation to move forward. So what I'm gonna talk about right now is these two pieces. If you're an existing company and you have full-time employees, W-2 of 30 hours or more, and you have 5 or more employees, I have the ability to help you reduce your FICA payroll taxes and work comp per payroll cycle ongoing at no investment to your business and no cost to your employees. I won't go into it too deep, but I will show you what that looks like. And this is in addition to your health insurance. It's in addition to your, and we don't, replace your broker. We don't usurp anyone's authority. We come in, we execute, and you can actually save about $600. So you take 25 employees, I've already done it, $15,000 net FICA savings per year. And that's divided by how many payroll cycles you've got, and that's in real time without any cost to you. And then you can also reduce your payroll by 300 grand a year. Now in California, it's a very unique situation is that work comp payroll is based on gross payroll minus all Section 125 pre-tax dollars. So if your work comp percentage here was 5%, you're gonna alleviate another 15 grand, and your work comp broker stays there in place, and your health broker stays exactly the same. And it doesn't cost you a penny. And it's all these compliant pieces: IRS, ERISA, HIPAA, and ACA. And we can talk about that on a discovery call. And then I'll go back to the survey if you don't mind, or the intake form. Now, work comp is necessary if you've got W-2 employees, right? And so, as a matter of fact, we got a great work comp friend of mine that's on the call, but we're not here to replace the broker or challenge their authority or their ability to serve their clients. But we can do a third-party audit on the carrier, and we do it all over the country. So they've got $40,000 annually. We're going to keep the broker in place, but we're going to audit the carrier, which is really all the levers behind the curtains, right? The broker's serving you, known them for 30 years, that's fantastic. But we should know that what the carrier is doing behind the scenes. And I've done some audits where I've found some savings because of errors, and it's usually a payroll error, like the pre-tax dollars piece. And we found 20 grand for the owner, and we charged them a fee, and their broker stayed in place. Actually, that broker was in place for 35 years. So we basically take some information, we run it through kind of like when you get your oil change, you get a 33-point check audit, where they do an audit on everything though. They audit your tires, they do everything, and then you're either going to say yay or nay, but you're still getting an oil change. We kind of do the same thing. We reveal it, and if you decide that this is not something you want to move forward with, it won't cost you a penny. And if there's no savings, of course, it won't cost you a penny. And we'll do the same with credit cards. We're not a merchant, and that's what's great about it is we don't put it out to bid, but we know how to audit a credit card merchant and make sure that they are charging you the proper fees, and transaction fees and such. And we'll reveal those to you. And if they look great, we confirmed it. If they don't look great, we work with that carrier or merchant to make sure that you are being charged properly, and then you keep your service representative in place. And then waste and recycling, same process. It's not a huge savings, but once again, any amount of dollars that can be reduced increases your profitability. So I believe that's it. Oh, and then there's one last thing. I'm not an actual expert at it, but it is part of the CARES Act. You want to seek your tax professionals out and advice and see if you might qualify for this provision. It has to do with net operating losses, or NOLs, and then go back 5 years in net operating losses and get you up to 100% of your taxes paid back. There's an article on it, and it's right here. And I think my time is perfect. So I'll forward this article. And of course, you want to seek out your tax professional, but this has been in place for a long time. But the CARES Act has allowed some agility within it, if you will. So reach out to your CPA or tax advisor, and they might be able to help you put this together as well. So I'll pause. We have lots of time now for any questions or concerns. Okay.
Yeah, nothing in the chat, but you can unmute yourself and ask a question if you like.
That'd be great. So what I'll do is I'm going to also, and because they're recording this, so this is the one pager that kind of explains some of the things that we do and the average savings. We'll also post the link to the survey or intake form. So if you're a professional and you think this helps one of your clients, you can either help them fill that out, or you can contact me and we can work together to collaborate and help that client. I work with a lot of different types of partners and collaborate. And or if you're a client, you can fill this out, give me a call, text me, email me, and I'd be more than happy to walk you through it. And then we can schedule a deeper dive discovery call to help you get to the results that you might want.
Well, this is Pauline. When they fill out the survey, what's the time frame in which they will get contacted?
They'll get it back within 24 hours, but usually it's within a couple of hours. It comes back to my headquarters, if you will. And I've got someone that handles just this piece. And then what we would actually do is, here, actually, if you don't mind, I'll show you a couple of the slides. So we would actually put together a savings estimate. It's not an actual assessment, but it would look a lot like this. Here you go. We'll go. So this was for a winery based on $1.5 million in payroll. This is the R&D piece. It explains it. So we'll give them a savings capsulation, but we'll also give them individual slides that explain each piece that's applicable to them. We'll ask them if this is intriguing enough to get on a discovery call. And then we put headquarters on with them. They can also, by the way, have their tax professionals or CPAs or any partners on that call. They can have as many as they like. And then we're going to go ahead and walk this through, address every question or concern they might have, and then come up with a navigation, like a GPS navigation, if you will, to the next steps. And then we'll ask them for some basic information on each piece to start those assessments. And then if we execute, then we will charge them a percentage of the fees, and they state them right at the bottom of the slide. But they're never going to pay us a penny up front for doing the legwork. That's why I think it's brilliant. I've always been in business in my past where we've never actually charged a business owner any money to do work with us. We got paid by others. So it allowed us to execute with white glove concierge service. Because really every situation is the boss. And so we're going to sit down with each business and help them navigate through, whether we can help them or not. And we'll know pretty quickly if we can't. But I think everybody deserves an opportunity to have that discussion, even if it only takes 5 minutes.
I have a question for you.
Yes, ma'am.
From Sheba. Do
Hi,
you
Sheba.
work with out-of-state businesses?
All 50 states. And as a matter of fact, I'm going to go check to see if we can work with, I'm pretty sure we can work in Puerto Rico and Guam, since those are US territories, but all 50 states. And it works exactly the same way. As a matter of fact, I just did a cost segregation study for a person that lives in San Francisco, owns the property in Idaho, though. Any other questions? Hopefully that answers it. And every one of these programs is all 50 states. So we're built to do it virtually. You know, of course, I prefer to meet people in person, but whatever it takes, again, situation of the boss, but it will take you literally 5 minutes to either fill this out or help you fill it out on a quick call. We get the savings estimate in front of you. And then, because you don't know what we don't know, and we don't know what you don't know. So we get together, we figure that out, and then we put it in front of the mothership, the headquarters. And man, they're brilliant at this. They will walk you through every piece. And if you need a CPA, tax attorney, your business advisor, anybody on the call, we welcome them all, so that this is 100% kosher, no or yes. You'll know why you're saying no or yes, and you'll know also what's available to you. So that this way you are bridging that gap, so that even if you're getting money from the CARES Act, it could take a while. I mean, and I'm not slamming the government. It is what it is. $2.3 trillion doesn't get disseminated quickly and easily if you don't have an automated software system that disseminates it already, right? They're not really built to do that. So, and then you got all these other variables. So we've got to work within the confines of what we know, but this is a great bridge and it's independent. What's nice about it is whatever monies we get you from this, you're going to take that, and then you're going to also take your money that is due to you from the CARES Act. I think you should get as much as you can without having to dilute the quality of your business or how you get those funds. We don't want folks in desperation. We actually need every business to stay in business, right? For all of us, for the community, for the chamber, but also it's a trickle down or trickle up effect, right? And so I think when we get on the other side of this, I think we'll be better off. But there's some businesses that are struggling right now, and some of them are closing, and maybe they could have a situation where maybe they wouldn't have to close, right? Or they could decide to do maybe a couple of different strategies and repivot because they have some things that are available to them that they might not be completely aware of.
Well, if there are no further questions, I would like to thank Will. That was very informative. And just remind everyone that we are currently holding Business Essentials on Tuesdays, Wednesdays, and Thursdays at 10 a.m. And we have some really interesting topics. And then we are also holding a town hall meeting on April the 29th with Rakuten about a new program that they're starting for restaurants. So thank you for being with us this morning, and have a great day. Stay safe.
Thank you. God bless you guys. Cheers.
All right. Take care. Bye-bye.
Bye now.